BellRing Brands will soon come to the New York Stock Exchange. Wait, who is BellRing Brands again? For subscribers of this channel, or just those that are regular viewers of videos on my channel, you have heard me talk about BellRing Brands before. But until recently, they were actually called Post Holdings Active Nutrition Brand. If you remember from this video, and I'll pop up the link here for you guys to watch it, I mentioned that Post Holdings filed its initial paperwork to spin off its active nutrition brand portfolio from the larger cereal heavy CPG brand portfolio. That is much lower growth, but much larger scale. Post Holdings will sell about 20% of its ownership in BellRing Brands under the stock ticker BRBR. The actual IPO date is still not available, but they are saying it's going to be sometime in fall, so I would assume probably in the next 30 to 60 days. Now, if you are completely confused and not understanding who Post Holdings Active Nutrition Brands are, and you certainly have no idea what I'm talking about with BellRing Brands, just to give you guys a short summary on the brands, the consumer brands within this portfolio, you have Premier Protein, you have Dymatize Nutrition, you have Powerbar, you have Supreme Protein, and you also have Joint Juice. Now, the purpose of this video is for me to break down the S-1 filing for you guys and give you all the important information that I can pull from it, because this is the newest active nutrition portfolio that is going to be publicly traded. So we are able to peek behind the curtains much deeper. We're able to kind of watch the moves of these brands much closer, because they will no longer be a part of a larger portfolio that they hide some of the things in here. There's just going to be a lot more transparency to these brands. And in this video, I'm going to be breaking down some of the growth strategies, some of the risks, and just overall what I think the new company's future is going to hold. Now, BellRing Brands is going to be still headquartered in St. Louis. It's going to be led by Darcy Horn Davenport, which will be the CEO and president. She has already been leading the segment before the spinoff. And just for the sexist men in the industry, if you are keeping score, that now marks two of the most powerful, largest active nutrition portfolios that are led by women. Because if you're not aware, Glambia is also run by a woman, Schall Talbot. So maybe it is time for everybody to retire the good old boys club. Now, before I go too far and start throwing numbers around like Matt Damon's character from Good Will Hunting, let's address the elephant in the room.
Ooh, Doritos.
What does BellRing Brands mean? If you look at BellRing Brands in terms of a Google search, it is the #1 Google search, like what does BellRing Brands mean? And from what I can find from the filing and some different articles, it is attached to a core value that they do have now on BellRing Brands, which says, "We ring the bell. We celebrate small victories as well as big wins. We are a low ego group, inspiring and appreciating each other, happily sharing credit, all to ring the bell." So aspirational, I like the concept of it. I don't know if anybody's going to understand it, but portfolio names as a whole don't really need to have much of a connection with people. They're really looking at the consumer brands underneath the portfolio. But I appreciate the effort, either if it was internal or if it was from a creative agency, external, that they put some thought around the name and had it connect to a bigger core value. Now let's jump into the fun stuff. Numbers. Okay. I promise only a few, and they're going to be easy to follow. And to help you guys also, I'm going to flash up some images on the screen so you guys are not just seeing a bunch of numbers fly over your head. So last year's fiscal net sales were $828-ish million. And over the last 2 years, those net sales have had a 20% compounded annual growth rate. Now, if we look at sales by brand, we have Premier Protein, which is 77% of the sales. You have Dymatize Nutrition, which is 13%. Powerbar, which is 7%, and then a combination of Supreme Protein and Joint Juice is 3% of the sales. Now, if we take a sales by product, we have protein RTDs, which is 71%, powders, which is 14%, nutrition bars, which is 11%, other RTDs, which is 2%, and just another category in general, which is 1%. And then finally, if we take sales by channel, we have the club channel, which is primarily driven by Costco, which is 63%. You have food, drug, and mass being 16%. You have specialty retailers being 12%, digital being 5%, and then another category being 4%. Now, obviously, all those numbers were about top-line sales. You guys might be wondering, is this portfolio profitable? They're definitely profitable, and they've definitely been growing that profit over the last couple of years. It's been growing 6x the compounded annual growth rate of the sales number. And similar to other well-operated, big key here, well-operated, I'm talking about that is much different than a lot of the other active nutrition brands today. These active nutrition businesses that are well-operated have an attractive financial profile, which includes high margins, modest capital expenditure, and limiting working capital requirement. And all that enables them to generate significant free cash flow. So let's jump into the growth strategies of the BellRing Brands portfolio. First one that they want to focus on here is driving increased household penetration. So they threw a bunch of numbers in there talking about the flagship Premier Protein RTD and how Protein RTDs have a much lower household penetration, but growing extremely fast, comparable to nutrition bars. So they think there's a ton of opportunity for them to get more household penetration as protein RTDs as a category grows very quickly. Them being 53% of the convenient protein RTD category growth, and a lot of that growth being driven by new category buyers and incremental consumption of existing buyers. They think there's a ton of opportunity in this area for them. Their second growth strategy is to deepen existing customer relationships and continue to expand across channels. So they talked specifically around how well they've done in club channel and how they are going to continue to kind of deepen relationships with somebody like Costco, but they thought their biggest opportunity was with the food, drug, and mass channel. They said that Premier Protein only accounts for about 4% of the shelf space in the convenient nutrition RTD category, but they're generating 9% of the sales. And they have some of the highest sales velocity rates in the category within the food, drug, mass channel. So with all of those numbers lining up correctly, they think they're going to have the ability to get incremental slotting and get the ability to have much more shelf space in these channels as the years go on. The third one is around rapidly innovating across brands to meet evolving customer needs. So they did not really show their hand in terms of their product development map and just what they're going to be coming out with over the next couple of years. But I know from other articles and some of the other quarterlies that are broken down, they have mentioned some different product innovations around their flagship Premier Protein line. And these are in the areas of plant proteins and then egg proteins, so utilizing non-milk-based proteins. Their fourth growth strategy is around the expansion of international market. They specifically made notes around the international convenient nutrition category growing. They said that right now sales are around $15.6 billion as a category as a whole, but in 2021, that number will jump to $21.1 billion, representing a compounded annual growth rate of 11%. And them being a leader and focusing on the international markets, they believe that they can have a large slice of that international convenient nutrition category. And then the final growth strategy they talked about is by pursuing value accretive acquisitions. So you guys hear me a ton of times talking about food and beverage acquisitions, functional food and beverage acquisitions, and how important that's going to be in the future. They are talking about this is going to be a keystone of their growth strategies, and they believe that food and beverage is highly fragmented and has a ton of opportunities to pursue value-enhancing acquisitions. So another buyer that's out on the market looking for functional CPG food and beverage brands to pick up and put in their portfolio. Now, I have to talk about the risk side here, and it's probably important for me to note here that any of the information that I'm giving you here is not me telling you to purchase this IPO when it goes public. I'm not telling you this is a good investment, bad investment. I'm not telling you anything about that. I am not a financial analyst. I am not a stockbroker. I don't have any credentials to tell you any of those things. I might be somebody that invests on my own and enjoys that as a hobby, but I am not giving you any investing advice, so please don't take it that way. This is just for your entertainment purposes. This is for your information purposes. You guys need to make those decisions on yourself. But to jump into the risk side of things, The first one that they talked about was around how 70% of their sales came from one specific product category, RTD protein beverages. And they didn't believe that this was balanced enough for what they were expecting for in the future. So they're saying, hey, this is a short-term risk that we are going to be trying to address. Similarly, they did also talk about how the manufacturing of that category is very much dominated by one specific contract manufacturer. So if they do have spikes in demand, be that from other partners that they work with, or internally at Premier Protein, which happened earlier this fiscal year, they have risks of stockouts, they have issues in terms of their supply chain. So this is a risk that they need to really be conscious of. They made note, something that I talk about a lot, that the active nutrition category is extremely competitive. This is something they believe is going to be a risk going forward. It's not going to get less competitive, it's going to get more competitive. So they need to make sure that they are positioned well against that competitiveness. And then they did mention that Post Holdings still has the ability to control the direction of BellRing Brands. Post Holdings is only selling 20% of BellRing Brands. So they still have the dominant voting interests, and they have the ability, if they need to exercise it, the ability to control this portfolio. So I just want to finish up this video by just kind of giving you guys my thoughts. BellRing Brands has benefited from a lot of different consumer macro trends. First one is mainstream consumer are increasingly focused on consuming healthier food and beverage alternatives, and specifically on increasing protein in their diets. And that's regardless if Americans actually have any deficiency in protein. I don't think they do, but regardless, protein out of the macros, if we're talking fat, carbs, and protein, is the one that gets villainized the least. So people are always kind of very positive towards protein, thinking they need to add more protein even if they're not in any type of deficiency. And then finally, just around the snacking trend, consumers are just eating more frequently throughout the day. So those trends overall have lined up perfectly for BellRing Brands, being that a lot of their business is geared towards the convenient nutrition category. And I don't see any of those trends, those macro trends, really changing over the next couple of years. So I think there's going to be a ton of runway for BellRing Brands to grow, especially if they can stay ahead of the ever-changing consumer demands. So in my opinion, I believe BellRing Brands needs to focus on these following areas in the next 2 or 3 years. First one is around having some exposure to plant-based protein. So this is either through Premier Protein adding a line extension with plant proteins, or maybe going out and acquiring a convenient food and beverage plant-based brand. The one that I'm kind of looking straight at is OWYN, OWYN, which is owned by Jason Cohen. So maybe they can somehow acquire that brand. I think that would be something they can easily integrate into their portfolio. Second is also around an acquisition, and that is to really focus on buying a platform, better for you brand, a la a Quest Nutrition, that has proven that they can get sales velocity in multiple different categories in a food and mass digital perspective. I think acquiring a brand that is a little bit younger, a little bit more hip, that has a really close connection with their customers could help them with what I'm going to talk about next. But them trying to find something there to get a better integration in some of the channels like food, mass, and digital through different product offerings that are different than milk proteins, that are very much commodity driven, low margin type of products that globally is becoming more and more expensive over time. I think you need to look at how do you diversify your portfolio a little bit better. The ones that are within their portfolio now, unfortunately, are just not working. So you need to find one of those brands that have a proven team, proven connection with consumers, and those consumers are advocates of those products. Now, this last one that I was kind of focusing on was around channels, and why I mentioned this second acquisition needs to, if they could, find the right asset that can help them with some of the talent that they're going to need. But in the short term, BellRing Brands needs to focus on food and mass channel to appease the short-term investor demands. I think that's where we're going to be able to create the most amount of revenue, get growth numbers up to an impressive number. That is short-term where I would be focusing a lot of my attention. That gap could be filled in a lot of senses with just Premier Protein, just making sure that they are shifting some of their sales strategies But long term, they need to be focusing digital and direct to consumer. And how do they own their customer? They need to be thinking like any other CPG portfolio right now. Just because you have a ton of growth and you're in a high growth category, and a lot of that can be overshadowing, maybe not needing to do some of these other things that large legacy CPG portfolios are spending a ton of time trying to wrap their heads around. You need to be doing the same thing. So you need to be thinking digital, need to be thinking direct to consumer. How do we own this customer? How do we make sure that we have a close connection with our customers? So having only about 5% of your sales digitally is not going to work. That number needs to expand extensively in the next couple of years. I know that they've mentioned that they're growing 50% compounded annual growth rate over the last couple of years, but that number needs to grow much quicker than that. That base needs to get up there towards the $100+ million to really start making an impact long term in their business. Now, final one here, and this has kind of nothing to do with maybe where I would focus, but it's just kind of a tip, I think, for the leadership team at BellRing Brands. And this is the idea that you need to hit the ground running. You need to be aggressive right off the bat. And that is because you have daddy still watching you closely with post holdings. And if you are not showing that you can drive growth, drive value to the overall portfolio, they will come in and they will make changes. They're probably going to control a bunch of things. They're going to start putting a bunch of processes and procedures and things that are going to slow you up. So you really need to knock the first couple filings, the first couple earnings reports out of the park so you can have total autonomy to make decisions that you need. You do not need to be stuck in decision-making processes at a large portfolio like post holdings. It's going to slow you up. You're going to lose long-term to much nimbler, faster people within the category. You mentioned it in your risks that you do not want to have post holdings be on your back all the time. You also are concerned over the competitive landscape within active nutrition. So you need to get them out of there. You need to give them the confidence to be able to walk away and be able to not micromanage anything and slow up all the decisions with this idea that it has to be billion-dollar or bust type of investments. You need to think smaller. You need to think like your competitors. You need to think like the nimble growth portfolio that you are. So want to wish everybody good luck over there at BellRing Brands. I am excited to see how they can stretch their wings by themselves. Thank you so much for watching this video. If you want to help support me, make sure you guys hit that thumbs up button on this video. If this is the first time you've been introduced to my videos, would love for you guys to be a part of my community by subscribing to my channel. I upload several videos just like this weekly. And if you guys want to connect further outside of this platform, I do include all of my social media links down below. I just want to thank you guys again for your time. Hopefully I gave you some value in return, and we'll see you guys on the next video.